The political and economic stage, a roller coaster of optimism and reality. The year 2025 has been a powerful lesson in Bitcoin's connection to global macro forces. Following a pro-crypto executive order from the Trump administration, optimism surged. This led to a historic peak for Bitcoin, which reached an all-time high of $126,000 in October. However, the celebration was short-lived. The market was soon reminded that sentiment alone cannot override economic fundamentals. The announcement of 100% tariffs on China sent shockwaves, triggering the largest single-day liquidation event on record, $19 billion in 24 hours. The price tumbled, erasing nearly $1 trillion from the total crypto market value by year's end. As one market analyst noted, this crash was a collision of structural factors, showing that macro forces really matter more than political stances. The institutional transformation from speculation to a well-lit establishment. Beneath the dramatic price swings, a profound and quiet institutionalization has been taking place, fundamentally changing Bitcoin's market behavior and its perception in traditional finance. Financial products and mainstream access. The approval of Bitcoin exchange-traded funds or ETFs has been a game-changer, creating a regulated bridge for massive institutional capital. Major financial institutions like Citi Research forecast continued growth with a base case price target of $143,000 for the coming year, citing expected ETF inflows of $15 billion. Corporate treasuries and new dynamics. The strategy pioneered by MicroStrategy of holding Bitcoin on corporate balance sheets has created a new class of whale. In 2025, we witnessed a great redistribution, where early investors sold billions in Bitcoin only to have their coins absorbed by corporate treasuries in ETFs. This has created a new cycle where profit-taking dynamic has shifted from whales to retail. Market maturation and stability. This institutional embrace has had a direct calming effect on Bitcoin's notorious volatility. Large holders began using sophisticated options strategies to generate yield, which steadily reduced market turbulence. As one expert noted, the result is a sign that real money is long and hedged, a hallmark of mature institutional behavior. Real-world utility, from global remittncers to local grids. Beyond trading, Bitcoin's core technological promise is being tested and applied in tangible ways that affect daily life and economic structure. A lifeline in inflationary economies. In countries like Venezuela and Argentina, Bitcoin serves as a critical alternative store of value and medium of exchange, offering a lifeline away from hyperinflating local currencies. Powering economic development. The act of mining Bitcoin, securing the network, has evolved into a significant economic activity. In the United States alone, it contributes over $4.1 billion to annual gross product and supports more than 31,000 jobs. In states like Texas, miners have become key partners for energy grids, using their flexible power demand to stabilize the network during peak times. The promise of financial inclusion. The original vision of a peer-to-peer electronic cash system holds immense potential. For the 1.7 billion unbanked adults worldwide, cryptocurrencies offer a pathway to participate in the global economy without needing a traditional bank account. Projects have explored its use for small business owners in places like Kenya, enabling direct, borderless transactions. There's a fascinating and complex story unfolding around Bitcoin right now, one that goes far beyond its famous price swings. The most authentic evidence of its importance isn't found in headlines about becoming a millionaire overnight, but in a series of major, quieter shifts that are weaving Bitcoin into the fabric of the global economy. Let's talk about what's actually happening. The global money shift. Grassroots adoption meets institutional giants. For years, people spoke of Bitcoin as a niche technology, but today its adoption is surging on two distinct fronts, from the ground up in everyday economies and from the top down through major financial institutions. From the ground up, practical use in daily life. Look at the latest global adoption data. Countries like India, Pakistan, Vietnam, Brazil, and Nigeria are leading the way. Why? For millions of people, Bitcoin and other cryptocurrencies are not speculative investments. They are practical tools. They are used for remittances, sending money across borders faster and cheaper than traditional services. Hedging against inflation. In nations with volatile local currencies, people use crypto to preserve the value of their savings. Financial access. Providing services to the approximately 1.7 billion adults globally who remain unbanked. This trend is so powerful that adoption is accelerating even in places with formal bans, like Bangladesh, Egypt, and Algeria, proving that grassroots demand for alternative financial tools is a powerful force. From the top down, Wall Street embraces Bitcoin. While individuals are adopting it for utility, the traditional financial world is embracing Bitcoin as a new asset class. The approval of spot Bitcoin ETFs in the United States was a watershed moment. These regulated products attracted nearly $15 billion in net inflows in just the first half of 2025. We now have a situation where over 12.5% of all the Bitcoin that will ever exist is held in ETFs and corporate treasuries. Companies like MicroStrategy hold billions of dollars worth on their balance sheets. This massive influx of real money has fundamentally changed Bitcoin's character. The maturing market, from wild swings to sophisticated stability. This institutional embrace is directly responsible for one of the biggest stories of 2025, the dramatic calming of Bitcoin's notorious volatility. Here's how it works. How institutions are taming Bitcoin. Large financial players aren't just buying and holding Bitcoin, they are using sophisticated strategies from traditional finance to manage it. A key strategy has been selling call options. Think of this as a large Bitcoin owner collecting an insurance premium by agreeing to potentially sell their Bitcoin at a higher price in the future. This activity creates steady selling pressure in the options market, which directly reduces the market's expected volatility. The result, Bitcoin's annualized 30-day implied volatility fell from around 70% at the start of 2025 to roughly 45% by year's end. The new motto? Real money is long and hedged. This means the big players are bullish but protective, a classic sign of institutional maturity that makes the market less prone to panic and wild speculation. The inescapable challenge, the environmental ledger. No discussion of Bitcoin's importance is complete without addressing its significant environmental impact, which remains its most critical challenge. The scale of the footprint. Bitcoin's proof-of-work mining mechanism requires vast amounts of energy. Its estimated annual carbon footprint of 98 million metric tons of CO2 is comparable to the emissions of entire countries like Qatar. Its electricity consumption is higher than that of Norway or Sweden. A single Bitcoin transaction has the carbon footprint of over 1.5 million Visa transactions and uses enough electricity to power an average U.S. household for more than 44 days.